Today we talk about Saccos. We need to understand what a Sacco is, how they work, and we need to understand whether the Saccos are good investment opportunities. And then later we'll need to understand what factors to consider when choosing a Sacco to join. A Sacco is an abbreviation for Savings and Credit Cooperative Society. Basically, it's a member-based financial institution which operates on cooperative values, identity, and principles such as social responsibility, openness, honesty, and caring for each other. A Sacco is an association that is registered and authorized to take deposits and lend money to its members. The Sacco pools the savings and lends them out or invests in authorized instruments such as shares, treasury bills, and bonds as authorized. Of course, in Kenya, there are over 150 registered Saccos in Kenya. They are regulated by the Sacco Society Regulatory Authority, which is also known as SASRA, and they have a combined asset value of over 400 billion. Many Saccos in Kenya have restricted membership to its industry or sector of working. For example, Stima Sacco came up as a result of people who work within the power generation and distribution sector, employees. We talk of Magereza Sacco, which was formed by prison service employees. Talk of Mwalimu Sacco, which was formed for teachers. Talk of and many other Saccos, Unitas. There are so many Saccos in Kenya. So recently, some Saccos opened their membership to other members of the public. For example, Stima Sacco, you don't have to be in power generation distribution sector for you to be a member, but you can buy shares and be a member in Stima Sacco. So you must first buy shares in a Sacco to become a member. Members can save their money in a Sacco. Every Sacco has a minimum share capital. A Sacco savings scheme is strictly regular. Monthly contributions must be maintained throughout the course of membership without default. For example, if you are not within the sector, if you don't share the same values as the Sacco demands, you need maybe there's some Saccos which demand for 40,000 a share capital and monthly contributions of 3,000. So you must ascertain the size of your regular income to determine the amount to be deducted every month. In a Sacco, to save is to deposit, and to access deposit is to borrow. You have to take a loan to access the money. You need to note this. Once you put your money in a Sacco, you can only access the money by either taking out a loan or terminating your membership. Although members have a choice to determine the size of their monthly contributions, there is a mandatory monthly payment. The loan you qualify for must be within the limit of your savings. A member has to save for a period of not less than 6 months to be considered for credit. As a universal rule in many local Saccos, the member is only eligible for up to 3 times his savings, but nowadays some Saccos have up to 5 times. While banks insist on collateral, Saccos only need members to guarantee the loan. The guarantor definitely must be a member of the Sacco and must have accumulated deposit should be equivalent to the amount that the guarantee is borrowing. In case of default, the guarantor bears the debt. The Sacco will therefore seize his deposits until you settle the debt. Loan repayment is separate from your regular savings plan. This you need to know that you'll keep making deposits to the Sacco while you are paying your loan. Your regular contribution to the Sacco must be maintained even as you repay your loan. It's advisable, therefore, to find an extra income for loan repayment as you continue to save. Which Sacco should you join then? The best Sacco for you is the one whose products and services match with your needs. The following are some of the factors or things that you should consider before joining any Sacco. The one fundamental thing that you should consider is whether the Sacco is registered under SASRA. Definitely this you can confirm from the SASRA website for the updated list of registered Saccos in Kenya. 2. The safety of your money. You want to have an insurance for your money. It is therefore very important to find a reliable Sacco that is registered, insured, and regulated. 3. Interest on loans. Take a keen interest on the interest rate on loans. 1. Are you comfortable with it? Because definitely majority of people save in Saccos to take out loans because they offer cheap loans. So you need to determine or check their interest loans. 4. The interest on deposits, also known as the dividends. Saccos pay annual dividends to their members. These you need to compare different Saccos for evaluation. Most Saccos publish their rates on their website. You see, if you know how much they pay on their deposits, how much they paid in their previous year, you can easily gauge or determine what will happen next year depending on the economy, of course. Like, there are Saccos which pay 12%, 13%. There is one I saw which gave up to almost 20%. 5. Technology. In the modern world, you won't have a Sacco that will keep you in their offices all the time while others have all their operations on mobile phones. So look for a Sacco that you can have access, which have mobile phone app, which you can easily make deposits, you can make transfers. It's easy to access, it's easy to get your monthly statement and all the updates. So consider the technology factor. It should be well considered. 6. Loan repayment period. Of course, go for a Sacco with the most flexible terms. In this manner, I mean, like, if anything happens, you are able to negotiate on the repayment terms and see if they can reconsider the new terms. 7. A Sacco that you can be able to access their financial statements. You can, of course, go through the statements and find they call the health of the business. 8. Ask for referrals. There are Saccos. Ask around to find out what Saccos your friends have joined. Of course, you'll need guarantors if you need loans in future. So find Saccos where your friends are or people whom you know. In case you need a loan, they are able to guarantee you. 9. Customer care service. This is one of the most important thing on how Saccos deal with their customers. It's good to ask around to find out a Sacco which serves their customers the best. Sacco's good investment opportunities. Unlike banks, they have lower interest rates on loans and higher interest rate on savings. No, they do not require any collateral during when you want to take loans, so they only look for guarantors. 3. Emergency funds are catered for. Saccos can process emergency loans in hours. And also, Saccos create a saving and contributory discipline, and they also have a lower mortgage rates. If you've watched this video up to this end, I want to thank you and I want to really appreciate you. I've done a couple of other videos. If you wish to watch why you should spend your money as much as you are saving, I'll leave the link up here. And I want to appreciate, I wish to ask you to subscribe to my channel. You leave a comment on what you think about Saccos in Kenya, which are the best Saccos, which Sacco have you joined, how much monthly contributions are you making, and lastly, what was the interest rate on savings the last financial year. Adios, I love you all.